Hello Mavericks, this is Emery and welcome back to another currency recap today. It is Thursday, February 15th. Okay, let's get right into it. So as always, we'll be doing a review of the trading day today, taking a look at any meaningful news, looking at what's going on in the commodity markets and the broader equity markets as well. We're going to be taking a look at currencies, of course. That means crypto and foreign exchange, and we're going to round things off by looking at any potential trade setups. All right, let's get right into it. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Now, traders will trade firm capital and keep 70 to 80% of the profits. So if you're a technical trader with a technically based trading system, we want to meet you. So please click the application link in the description below this video. Now let's break down today's market action. Starting things off with some market analysis. All right, so retail sales dropped more than expected today. That's resulted in equity strength and dollar weakness, broad-based commodity strength as well. As we can see, oil up over 1%, gold up almost a little over 0.5%. Crypto surprisingly kind of flat today. Total world stock index up nearly 1% and the S&P up over 0.5% as well. And when we take a look at currencies, you can see that the dollar was the biggest loser on the day. The yen was flat and the Swissy was the biggest winner on the day alongside the loonie and the Australian dollar. The euro was mostly flat today. The pound slightly underwater and the Kiwi dollar was also flat. If we take a look at our cryptos, you can see that Bitcoin is flat. Bitcoin Cash, however, down over 3.5%. Ether up over 2%. Litecoin pretty much flat on the day there as well. So market outlook remains the same. No change from yesterday. We had another great trading day today, expecting to see new all-time highs very, very soon. Now, if we take a look at this chart of the S&P, you can see how beautiful and textbook that Tuesday sell-off now looks like. We pulled right into that 20-period moving average and haven't looked back since. Look for that new all-time high, either to end the week tomorrow, if we get a decent day tomorrow, or early next week would be most likely. And again, this is the benefit of having a mechanically driven scoring system. Yes, the market's crazy extended. Yes, it's overbought. Yes, there are bearish divergences. None of that matters. We still follow the scoring system, which gives us a +3. And then over on the news side of things, like I said, retail sales came in well below expectations, highlighting perhaps a crack in consumer sentiment. And the reason the market cheered that is because it's a welcome foil to some of the stronger economic data that's come out. That's forced the market to rethink what interest rate cutting or easing expectations can look like from the Fed. In overnight trading, we're going to have retail sales out of the UK, and then early in the morning, we're going to have core PPI come out. And then consumer sentiment as well at 10 a.m. So that those PPI figures will be important. Okay, moving on now into some currency analysis. The velocity scores are very interesting. We've got the Aussie at a +3, the loonie at a +2, the Swissy at a +1. We have the Kiwi and the euro at a 0, the pound at a -2, and at -3 we have the dollar and the yen. So with that in mind, we're going to hop over now to TradingView to take a look at some of these currency baskets. So starting things off with the yen here, there's no change from yesterday where I said look for this to break clean before you get involved with the yen. I don't want to buy the yen at these lows, but I also don't want to sell right into the support either. So I think the yen is best left alone. Let's see if we can get a new closing low. And if we do, I'm looking for a pullback back into that broken support level, see if we treat it as resistance, and then I can look for short positions accordingly. The US dollar up next. You know, I'm interested to see whether we get more sideways action here or pullback. So far, this is a pretty sharp pullback. Now, I'm not ruling out higher in the dollar, but I have a key level here of 122 in this basket, which is the Feb 7th low. If we take that out, I think that probably signals an end to this current phase of dollar strength. Next up is the Swissy. So we found support off the bottom line of this parallel channel here that I've drawn. And we're nearing oversold conditions. This is a little bit of a faster RSI. Let me actually pull up a Classic RSI, yeah. So we're not quite oversold yet, but we are approaching that 200 period moving average. I'd be very surprised if we don't at least meet the 200 period moving average, considering how close we are to it. And then at that point, I'd be more interested in playing the Swissy long. If we get a nice bear rally here, then I think that could be an opportunity to short the Swissy into that support level here, but you don't want to overstay your welcome. Okay, so next up is the euro, just going sideways. I have zero interest in the euro right now. That simple. Pound, so the pound's outperformed, and then we have this range here that we just can't break out of. So we just can't break out of this range for the time being. I don't want to trade whilst we're in the range, but if you did want to trade the pound, I'd suggest buying at the bottom of the range, selling at the top of the range, and then eventually that range is going to break, and we should get some directional momentum in the pound once again. Okay, the loonie. I'm still personally bearish on the loonie, but I need to see the loonie start to break down before I can take any action. I don't really see a bullish setup in the loonie right now. However, it is important to point out that we have a cluster of moving averages as support down here. So the reason I'm not bullish on the loonie, however, is because we got this big move down, and I'm just seeing this as a larger bear market rally, and I'm expecting to play another leg of loonie weakness. Okay, so the Aussie dollar is trying to break out of a range, and we're coming up into some moving average resistance here. This would be that area where if you want to play the range, you'd be looking for short positions against the top of that range. And then finally, we have the New Zealand dollar also in a range, but this time we're kind of closer to the middle of that range. So if I just draw some Fibonacci levels over the range itself, you can see that we're not too far from that 50% mark over the range. In other words, we're in no man's land, and that means I don't want to play the Kiwi. Any range-bound market is not my preference to trade. Like I mentioned earlier, if I do want to trade a range, I want to be a seller at the top of the range and a buyer at the bottom, and it really is that simple. So not a whole lot of movement in the currency markets. Not too much to get excited about right now. The problem with crypto, of course, is that we're so far away from the mean. You know, look at the distance between where prices are and the 20-50 period moving average. We need either a price-based correction or a time-based correction. All this is to say, and this is the same message I had for you folks yesterday, I don't think the currency market is particularly exciting right now. Okay, so that means keeping your powder dry and only selecting the highest probability opportunities. So in conclusion, just continue to play that relative strength and weakness, continue to follow proper position sizing, and always, always follow your trading plan. That's it for me, folks. See you next week. Bye for now.